Good, good afternoon, ladies and gentlemen. Welcome to Magic Bricks Hangout Series. Our endeavor is to trigger a buy and bring back consumer confidence in the real estate market. The topic of today's session is home loan tips for NRI property buyers. To discuss on the same, we have Mr. Vineet Jain. He is the CEO and founder of LoanStreet.in. He is at the forefront of strategy, fundraising, and digital marketing for the company. Vineet has been a senior leadership position, helping sales and distribution in top institutions in the banking sector. He carries a rich experience of process management, leading high performance teams, and setting up a new business geographies. Managing retail distribution channels and customer-centric businesses has given him the ideal blend of acumen and expertise to lead a customer-focused distribution network such as Loan Street. Vineet, I welcome you on the board. Thank you for joining in today. This session is specifically for our NRI home buyers. We are actually catering to this particular section of the society under the DHF platform, which has been launched by Magic Bricks. It's a season 2. DHF is a Diwali home festival. It's a season 2 of it. So we see a lot of traction and we see a lot of queries coming in from NRIs on a regular basis, not only in this season, but on a regular basis, that they are really confused on the, home loan tips, that what they should do, what they should not. Those who do not have any relatives, they have more queries on it. So without any further delay, I think we should just start with the queries. We are receiving a lot of queries here. So Vineet, my first query goes here. It's from Nandita. She's saying, can NRI resident of another country apply for a home loan in an Indian bank for a property in India?
Yeah, of course. Barring a few regulations, one example I can cite is somebody is in US. So there's a dual tax treaty with US existing in the Indian regulatory framework perspective, which prevents certain banks like HSBC from funding an NRI customer. But barring one or two exceptions, anybody who's an NRI can easily take a loan from any of the lenders in India for buying a property in India. No problem.
Okay. So is it necessary for a guarantor to be from India or for an NRI loan borrower?
Yeah, so not essentially a guarantor, but there could be a co-applicant who is a resident Indian, because there is someone who has to be on the loan structure, either a relative or a property owner who resides in India. So you're right, the word guarantor might be a little misplaced. It could be a co-applicant, a co-borrower, or a co-owner of the property. But yes, a resident Indian should be a part of the application.
Okay, so there's a query from Natasha. She says, I'm from Singapore and I would like to invest in India. What is the maximum loan period that one can avail while applying for a home loan?
Right, so if she is a salaried customer, the maximum tenure possible is 30 years. And for a self-employed customer, the maximum home loan tenure possible is 20 years.
Okay, okay. So her point B actually she's making here is, what is the eligibility criteria for an NRI planning for a home loan in India? She says that I've just started working in Singapore and I'm 28 years old.
Yeah, so on the home loan front, the minimum age is of generally all the lenders is 24 years. She qualifies on that criteria. And if she has just started working, she should wait for at least 3 months, because any lender will take at least last 3 months salary slip and a bank account of the bank statement of the salary account. So once she has completed 3 years, she can definitely apply to a lot of lenders in India.
Okay, okay. So I just want to ask, let's talk about the home loan interest rates. Are they same as for the Indians, for the NRIs as well? It remains the same?
Yeah, absolutely, pretty much the same. There is no difference whatsoever in interest rates.
Okay, so there is no extra tax also they have to pay?
Taxation is a different issue. So if they are buying a property, and so I'll give you, the tax structure is really huge, not from the loan perspective, from the loan perspective, whatever benefits under Section 80C on principal and interest are applicable for resident Indians, the same benefits are applicable for non-resident Indians also. There are some issues on tax related to repatriation of funds if they are selling a property, but that doesn't happen if the customer is actually taking a loan, because in that scenario he or she is just buying a property. Tax is levied, 1% TDS is levied if the property is lying vacant for more than 300 days, but that is from a perspective of income tax completely, not from the perspective of any tax benefit which a loan taker can avail in India. So no difference at all on that front.
Okay, okay. So there's one of the user who says that, can we buy an agricultural land in India? What are the documents required?
You can buy an agricultural land in India, but is this a query on pure buying? This is not a query on loans, right?
Actually, it's a query on what he's trying to ask you is that if we at all have to buy an agricultural land, and if we at all have to get it sanctioned go through a loan process, so what are the documents required for it?
Okay, so from an income perspective, all the documents like your salary slips, your Form 16 of the company wherever you're working, your bank statement of your NRI or NRO account, or an international account in the country in which you're working, your KYC documents, like you'll have an Indian PAN card, you'll have a passport. So all the income documents remain absolutely same. The only difference is that there'll be very select lenders who will give you a loan to buy an agricultural piece of land. So that is the only criteria which people should use. From the documentation side, you just need the property documents of the land as to how the land transfer had happened during previous years and how are you going to acquire the land. So there's a draft agreement which will be made between the land owner or the seller and you. So a copy of that and a copy of all the property documents and all the income all the normal income documents which you will give for any loan. That's the only requirement.
Right, right. So let's go on to a next query. It's from Rishikesh. She says that my brother is staying in abroad, New Zealand basically, and wanted to take a home loan. How can he avail the loan, and what are the process of applying this home loan?
So there are two ways to do this. One, that there are a lot of online platforms available like Loan Street or the other platforms also. They can just simply go online, submit an application, give all the details which are needed. These platforms can shortlist amongst the lenders available and can recommend who is the right lender. They also give a facility of uploading all the requisite documents online, and then they will manage the entire process. There's one little complication in this. Since he is in New Zealand, he will have to issue a power of attorney in the name of his co-applicant. Maybe it's his brother or whosoever is going to be a joint owner on the property or a co-applicant to the loan in India. His brother has to go to the Indian embassy in New Zealand and take the power of attorney format from the lender to whom they are applying. So there's a definitive format which has to be duly signed in favor of his Indian co-applicant by going to the Indian embassy. So there's a seal which the Indian embassy is going to put. That power of attorney can be sent across to India, and then all the documents can be signed by the power of attorney holder on behalf of his brother. So this is the only small additional thing which his brother will have to do, else everything remains same.
Okay, okay. So are there different types of home loan, available in the market for NRIs?
Yeah, so home loans can be 2-3 types. All right. So one segment could be based on rate of interest. So they can go for a fixed rate of interest or a floating rate of interest, or there's something else which is called a smart home account, which is an overdraft facility. So all these 3 types of home loans are available for NRIs. Secondly, they can differentiate in terms of going for an under construction loan or under construction property home loan or a completed property home loan, or they go for a subvention scheme home loan, wherein they only pay 5% and the bank is going to pay, or rather the builder is going to pay the interest for next 2-3 years until they get the possession of the property. So all these different types of loans are readily available for all NRIs, no issue with that.
Okay, okay. So the next query is from Rakesh. He's saying, what special home loans are available for women NRIs? Is the interest rate low for women home buyers?
Yeah, so the regular rule which is applicable for resident Indians, which is 5 basis points less rate of interest if there is a female main applicant, right? Or a female is a joint owner of the property. Same rule is applicable to NRIs also. A 5 bips reduction in rate of interest as compared to a normal home.
Right, right. A query from Mihir Sharma. He's asking, can two NRIs go for a joint home loan in India?
They can, but only if they are blood relatives and they stay in the same house.
Okay.
Only and only then they can go for a joint application. Of course, if they are husband-wife, they can obviously go for a joint application. But if they are like siblings, if they are two brothers, then only and only if they reside in the same house, then they can apply jointly for a home.
Okay, okay. There's Mehak Vasal. She's asking, what is the importance of home loan insurance for NRIs?
I think it's equally important for both resident and non-resident Indians. In my 15 years of experience, I've seen a lot of instances when unfortunate things have happened, and the biggest liability on the family is the home loan EMI or the home loan outstanding. So if there is a mortgage insurance cover taken, which is a very cheap rate of interest and inbuilt in your EMIs, then it makes sense, because in case of an unfortunate incident happening, the entire loan repayment is taken care of by the insurance company. So I think it's absolutely advisable to go for the insurance plan.
Okay, okay. So there's Nupur Sharma. She's saying, what is the eligibility criteria for borrowing a home loan? One. And secondly, she want to ask, can an NRI take a home loan for the construction of a house?
Yeah, the answer to the second question is yes, that NRIs can take a self-construction loan, no problems at all. The eligibility criteria is that each bank has a norm which is called debt income ratio or FOIR. So these are technical terms. In simple words, if someone makes 100 rupees, the bank is going to assume that 60 rupees will be available for the customer to pay any EMIs, and the remaining 40 rupees will go towards living their lives. It's children's education, rentals, traveling, eating, everything. So if 100 bucks is the income, the bank is going to say, okay, 60 bucks is the EMI available. If the customer is already paying, say, 10 rupees as EMI, the bank is going to say, okay, now only 50 rupees per month is eligible as or is available for the customer as free income, and they're simply going to divide this 50 rupees by EMI per lakh and going to come to a loan amount. So if EMI per lakh for that bank for that customer is 1,000 bucks or whatever, is say 1 rupee, then the eligibility is 50 rupees. Very, very simple calculation methodology. That is how they generally calculate eligibility.
Okay, okay. So there's Philip. He's asking that he would like to apply for a home loan jointly with his spouse who lives in India. What are the things I should be aware of? He's from Sri Lanka.
Again, the most important thing is that to make an application, a power of attorney will have to be given in the name of his wife. First thing. Again, the criteria is that he should go ahead and apply, choose the lender first of all, right? Because the power of attorney is very lender driven. Each lender has their own process. So the most important factor is to choose the right lender, then collect all the documents of himself as well as his wife, and submit these documents either online on a digital fintech platform, or go to any of the banks. Like for example, in Sri Lanka, there will be a lot of Indian banks available. I'm sure there will be ICICI Bank branches over there. be a couple of HDFC Bank branches also over there. He can simply walk into a branch, understand the whole process, and this will help him to shortlist which lender to go for. And then that power of attorney thing starts playing. He can go to the embassy, get a power of attorney made in the favor of his wife, and send all the documents across to India. Then his wife can apply jointly, signing on his behalf also, in the process will start. So I will feel that the most important thing is that you just explore either online or go to a couple of lenders, walk in if you prefer that way, and understand which lender you're choosing. Then go on to the power of attorney, and then send the documents across to India as a formal application. This should be the ideal process.
Okay. So this Deepak Jain, he's asking, I want to change my home loan from one bank to another. What are the things I must be knowing before switching the home loan? And he stays in US right now.
Okay. So first of all, is there a switching cost at the lender where he has taken a loan? So as per the new NHB and RBI guidelines, banks or any financial institution cannot charge any foreclosure fees on any home loan. But that is not applicable if you have taken any special scheme on your existing home loan, which could be a fixed rate of interest for say 3 years, which could be a subvention scheme. So if there is no switching cost, then he should calculate what is the switching cost. So what are the costs involved in switching? The cost will be a fee which the new lender will charge. There will be a stamp duty which might be applicable on creating the mortgage deed in the favor of the new lender. So these are the costs. And what are the benefits? The benefit is, so if the rate of interest is 10% right now, and he switches to 9.5%, it gives him 50 bips reduction in his EMI. So you can simply go to any online platform and use a benefit calculator. You can come to Loan Street, for example, and just click on a benefit calculator and calculate exactly what is the benefit going to be for a switch, and then see if the switching benefits are more than the cost, and go on for switching to another lender. And also I will give one more advice. Before taking the switching decision, you can still go to the existing lender and say, look, somebody else is giving me a better deal. I've been a customer with you. I'm paying my EMIs regularly. Why don't you only reduce my rate of interest? And that saves the customer from the hassle of going through the process again. So whichever way works, but first thing that you should know, what is the switching cost, what are the switching benefits, and then take a call. Simple.
Right. So there's a query from Mathur. He's asking, how do I select the rate of interest for my home loan? Shall I go for a fixed or a fluctuating interest rates? Kindly suggest.
So right now I would strongly recommend a fluctuating rate of interest, because fixed rate of interest are generally 50 to 100 basis points more than the flexible rate of interest. They also attract a foreclosure charge whenever you want to switch. So that should be kept in mind. And thirdly, I see the Indian markets rates are going to definitely go down. So if you are going to take the rate of interest of 9.4 floating right now, it's very likely in next 12 months you'll be at 8.75. Instead of that, if you go for a 10% fixed rate of interest, you'll still be stuck at 10% fixed rate of interest, even when the market has come down to 8.5 or 8.75. So definitely a flexible rate of interest.
Okay. So it's there's Surbi. She's saying, is it better to prepay a home loan as a principal amount payment is not exempted?
I'm sorry, but you'll repeat the question. I missed you there.
She's asking, is it better to prepay the home loan as a principal amount payment is not exempted?
Yeah. So again, it is a very straight Excel calculation, right? So you should just see what is the impact of prepayment, because you're right that prepayment is not going to, or principal repayment is not going to get you any tax benefit. But you should see that by repaying that principal amount, what is the reduction in tenure? Because any reduction in tenure is going to result in savings on the interest component which you are going to pay on your loan. So it's very simple. You should just go to a benefit calculator kind of stuff which is available online, and you should see what is the impact happening of doing that prepayment? How much interest cost is getting saved by reduction in tenure? And if you feel that is worth, more as compared to the tax benefit which you would have availed by investing this money somewhere else, you should go for it. As a fundamental principle, I would say that principal repayments always work in the favor of the customer, largely.
Oh, okay. So this Ali, he's asking, I'm an NRI, sold my father's property in Mumbai and have purchased one in Pune. With the balance funds. I'm planning to top up a bit and purchase another property, probably a shop in Pune itself. Do I have to pay any kind of taxes for the same?
So for buying, so capital gains tax is, obviously going to be applicable in this scenario. So I don't know that how much tenure is it, more than 5 years after the purchase. So I don't know what will be the tax implication on the property which has been sold. But if whatever capital gains was accrued has been reinvested into a house, then definitely no taxes at all, because there's been no repatriation of funds back to his work country wherever he is. As far as the new property is concerned, I do not see any tax implication on buying the property.
Okay. Ali, for your information, we had a legal session just before this session last week. So if you need any such query to be answered, you can go on to our NRI section under DHF page. Okay, Vineet, let me just go to the next question. It's from Aman. He's saying, I'm a first-time home buyer and want to purchase a property worth rupees 50 lakh in Gurgaon. Please give me tips on how much loan I should take before I, get into buying any property transaction. My salary is rupees 60,000 per month.
He's an Indian customer, right? Not an NRI.
He seems to be an Indian customer to me. He has not written it though, but seems to be an Indian customer to me.
So at 60,000 rupees salary, you can expect a loan of 35 lakhs rupees to be granted to you, right? And so if you're buying a 50 lakhs property and you're getting 35 lakhs rupees as loan, you have to remember the thing which most people forget, which is own contribution required. So you need to have 15 lakhs rupees in your pocket to be able to afford that property, right? So the first thing I will advise him is that you should apply to a to whichever lender you feel right, and take a pre-approved loan in hand, right? So then he would know exactly what amount of money he will get, whether it's 30, 35, 38, 40. And then the second factor to remember is that this is just 75% of the money. Remaining 20% of the money should be available with him to be able to enjoy this loan facility of 35 lakhs or 40 lakhs. So the most important thing in this whole scheme of things is get a loan approved for yourself, then decide on the value of the property you want to buy, depending upon the own contribution money available in your bank account or pocket or whatever.
Right. Okay, so next query is from Amrit. He's asking, what is the difference between getting a loan from a bank and from a housing finance company?
There's no difference at all between a bank and a housing finance company. So most of the housing finance companies, so there's a strategy difference between customer acquisition plan of an HFC and a bank. But otherwise, there's no difference at all, because HFCs generally focus on the affordable housing segment. So if you are buying a property, say less than 25 lakhs rupees, then you can look at an HFC. But more or less, I don't see any fundamental difference between taking a loan from an HFC and a bank from the customer's perspective.
Okay. So the next query is from Michelle. He's actually asking that when I buy a resale property, will banks provide home loan if the apartment is more than 20 years old? He says that I belong to Salzburg and I've shifted there long time back. So if at all I have to buy a resale property in India, will I get a loan on the 20-year-old property?
Yes, you will definitely get a loan on a 20-year-old property. The only difference is that the valuation agency of the lender will be more stringent. So if the property is well maintained and everything is proper in the property, and the residual age of the property is, say, at least 20 years, then the bank is definitely going to fund it. Because from the bank's perspective, the maintenance should be good and the residual age of the property should be more than the loan tenure they're going to give. Because they want to be happy that, before anything happens to the property, your loan is going to be repaid. That's the only criteria. So they're definitely going to say yes.
So it's 20 years old property won't really going to make any difference, right?
No, not it won't make a difference. The only thing is it should be maintained decently and the residual age of the property should be established. So everything is revolving around the maintenance of the property. If it is maintained well, then the residual age of the property will not be an issue. So you should just check whether the property is in a good condition or not. That's the only thing.
Okay. So a query from Mayank. He's asking if the owner also has a loan outstanding on the property, what is better, closure or a transfer?
Okay, so if you are comfortable taking a loan from the same lender from whom the owner is running a loan, then you should go for a balance transfer only. But if you're not comfortable taking a loan from there and the seller is able to close the loan themselves. A lot of time what will happen is the seller will say, boss, the proceeds which are going to come from this sale transaction, those proceeds only I'm going to use to kind of close this loan because I don't have otherwise cash available. So this is a very, there's no thumb rule over here. If you are really comfortable with the lender from whom the loan is running, the best thing for you to do is apply a loan to that lender only. It's an internal balance transfer, very simple and very easy. So I would say that you should do that if the lender is giving you comfort enough. That's the
right. Okay, the query is from Pawar. He's asking, does the bank considers statutory expenses if I take a loan?
I'm sorry, I don't understand the context of statutory expenses here, Neha, because so I'll try to answer. So I'm assuming that these statutory expenses are like stamp duty, registration cost, your MSCV meter bill cost, your water cost, your clubhouse cost, and all this stuff. So this is a gray area. Stamp duty registration nobody is considering now as per the guidelines of NHB. The remaining things can be considered, but that depends or varies from lender to lender. So some of them consider the clubhouse cost, some of them don't. This is a very, very gray area. I suggest that the customer or the loan seeker should go and check with their lenders first because they will be the right people to answer.
Okay. So I just have last two queries with me. Let me just take them up quickly as we are running out of time now. The next query is from Ravi Anand. He's asking, do banks consider insurance policies as additional collateral?
Not at all. From a home loan perspective, they will not consider any insurance policy as any additional collateral.
Okay. So this Samir who is asking queried in three parts actually. His query is in three parts. First part is, how will the changing interest rates affect my home loan? Secondly, he's asking second is asking that I would like to know that do banks offer mortgage as an overdraft facility? These are the two things actually he's asking mainly.
Okay, so answer to B is yes. They are offering overdraft facility for mortgage of property. It is called an OD against property and is available with a lot of players in the market like Standard Chartered Bank, State Bank of India, IDFC Bank, ICICI Bank. A lot of NBFC like Bajaj also do this. So the answer is definitely yes. And the interest rate scenarios are definitely going to affect home loan rate of interest because whenever there is a change happening in the RBI policy, the MCLR, which is the new rate of interest calculation regime in India, always fluctuates. So an upward revision generally, causes an upward revision in your interest rates quickly. A downward revision, banks are very smart. They don't pass on the benefit to you that readily. But still, it is going to affect. Any upward and downward revisions is definitely going to affect. Only in one scenario, this is not going to get affected, which is that if you've taken a fixed rate of interest from the lender. Otherwise, it's like a boat. So whenever the speed is more, the boat is going to run faster. It is less, the boat is going to run slower. That's the way interest rate regimes are in India right now.
Okay, we need your concluding remarks for our NRI consumers. I want you to just quickly give the tips to our NRI consumers.
Right. Sure. So my final statement would be that this is the right time for NRIs to invest in the country. The prices are really down. You're getting the best deals available. Lot of developers are trying to target NRI customers because there is a general slowdown in the buying spree which India keeps getting on and off. So right time to do investments, right time to negotiate good deals. Loans are really nice. I mean 20% CAGR on home loans. In Mumbai, I was talking to someone yesterday, and the loan book has really grown fast last month, especially. So there are transactions happening, choosy transactions. You should also be cautious. Choose the right builder, choose the right lender, negotiate the best deal, and go for the kill right now.
Thank you, Vineet. Thank you for coming on the show today. Thank you so much. It was great having you on the board. Thank you. Thank you to all our participants to be part of this hangout and making it a successful session.
Thanks, Neha. Bye-bye.